Welcome to part 2 of our Getting Your Money Right series on Windfall Wednesday, where we review basic principles to help the everyday person improve their finances. We previously reviewed the importance of having a clear goal and game plan for your finances, as well as what not having a solid plan in place will cost you. Today we cover how to protect your wealth as you build it, which ensures that none of your hard work goes to waste. I left a link to the first in this series in the video description below, so leave a like, subscribe if you haven't already, and let's dive in. At this point, you've got your basic expenses figured out. You know how not to spend 100+% of what you make, and you're beginning to have money left at the end of the month. So what's next? Keeping perspective over the long term, building wealth for most people comes through consistent investing and compounding returns over time. But there's bad news. Losing a great deal of wealth can happen very quickly. One catastrophic event can wipe out years of discipline and hard work. For a small-scale example, let's say you got no collision coverage on your $20,000 vehicle. Said vehicle gets totaled in an accident. Without using insurance coverage, how quickly would you be able to come up with $20,000 to replace the vehicle? One accident or illness with no health insurance coverage can lead to 5 or even 6-figure hospital bills. What about renters or homeowners insurance? One spark can set your house on fire and displace your entire family for months on end. One slip and fall on your property or in your apartment can result in very costly litigation. Imagine having no homeowners or renters insurance. Even if you don't own a home with a 6-figure rebuild cost, how far would it set you back financially if you had to pay a 5+ figure settlement on account of one potentially clumsy guest? The point? Cover your assets. You work too hard to have one random event happen at a moment's notice and completely reset many months and years worth of financial progress. As someone who used to be in the field, I'll give you a few key considerations to think about for your different insurance policies. And a quick reminder to like, subscribe, and share if you're getting value from these videos. There are many different types of insurance policies for many different things. Motor vehicle, boat, jewelry, identity theft, homeowners, basically anything electronic that you buy. In this video, I'll briefly review the 4 types of policies I believe everyone should own and why. Please be aware that there's more to each of these policies than I can cover now, and laws will vary based on your state or province. With that in mind, be sure to contact your local agent for recommended coverage limits and optimal recommendations for your specific situation. Car insurance. For you in the USA, at the time of this recording, 48 states require you to have car insurance anyway, or at least proof of financial responsibility or ability to pay for auto-related liability that you may encounter. Even if you do live in New Hampshire or Wisconsin, I wouldn't be the first to skimp out here. Car insurance policies are used for potential needs such as rental cars, reimbursement for medical care to yourself and or to others, and of course, the obvious, repair or replacement of damaged vehicles. Pro tip: don't be anxious to skimp on liability coverage, which helps protect you in case of lawsuits. Check with your agent about cost differences for higher levels of liability coverage. You may be surprised on how inexpensive an increase in $100,000 or $200,000 of this coverage can be. Health insurance. Many of you have some type of coverage through your job. For you married people, at least one of you may have access to this. If so, it's normally advisable to use this to cover your family's medical needs. Health insurance may not be cheap, but doctor visits, medication, and hospital stays can be exorbitantly expensive without it. Employers leverage buying coverage at scale, which tends to reduce costs for individual employees. If you need to go to your state's marketplace for health coverage, you'll see just how expensive it really is. Thankfully, depending on current laws and income limits, you may still qualify for discounts. Pro tip: be sure to understand your deductibles and your coinsurance. You will likely be responsible for some measures of upfront cost. These can differ between prescription drug coverage, hospital stays, ER visits, and regular checkups. Be sure to understand the differences between any coverage options that you qualify for. Homeowners insurance. This covers homeowners, renters, and condominium unit owners insurance. Of course, in case of firestorm or other misfortune, you want to be able to repair or replace your home. But even if you don't own any of the structure, as in renter's insurance, your personal belongings can still be insured. Think of furniture, electronics, small appliances, clothes, things that you take with you if you moved. Homeowners policies are also used to cover displacement costs, as in, where do you stay and how long do you need to order takeout while your home is being rebuilt? Perhaps most overlooked, these policies are designed to include personal liability coverage. A slip and fall on your icy driveway, a bite from your dog, and too many examples for me to name, may give someone reason to sue you. Again, don't be afraid to know the cost difference between $100,000, $300,000, and $500,000 of liability coverage on your policy. It's often minuscule. Pro tip: when it comes to personal property coverage or belongings, there's usually a difference between replacement costs and actual cash value coverage. Imagine getting money to replace your TV that you paid $1,000 for, except you only get $200 because of how old it was. That's actual cash value coverage. It depreciates the value of assets over time. Replacement cost coverage will give you the money that should take you to go out and buy something similar without factoring in depreciation. Check with your agent regarding the cost difference between actual cash value and replacement cost coverage on your policy. Alas, we've saved the best for last, covering your most valuable asset, your income. Most people would say that their most valuable asset is equal to the biggest purchase they've made, maybe their car or their home. Even in this inflated 2022 housing market, the average home price in the U.S. is less than $450,000, whereas the average income in the U.S. is $46,000, a little over actually. Now, multiply $46,000 by a 40-year career, even with no raises, and you have a lifetime income of $1,840,000. And what if there are two of you? The way to ensure your income? Life insurance. If no one depends on your income in any way, then this may not be your first concern. But if anyone does, it's potentially the most important insurance policy you can have. Keeping the house, the dance lessons and karate classes, funeral and final expenses, paying off outstanding debts. This one's so important that I've dedicated 2 separate videos just for life insurance. The links are in the video description below, but for now, here's the main point. Life insurance is typically more important while you still have a lot of responsibilities and vulnerabilities. Maybe 20 to 30 years left on a mortgage, maybe young kids, may still have consumer debt, and maybe not earning as much as you will be 10 years from now. A 30-year level term policy, yes, level, and not the one that increases in price every year, is generally the best bet. Good thing it's less expensive the younger you are, because young families tend to need it the most. Hopefully now you've gained more appreciation for this defensive aspect of building your wealth. Why spend time and energy to build wealth and leave yourself totally exposed to potentially losing it all in a short period of time? Next time around, we'll play some offense as we tackle the next steps of compounding wealth. Leave your comments below. Your feedback helps me to improve the channel. Like the video, subscribe if you haven't already, and if you got value from this content, hit the share button to spread the wealth.